Hey guys, how are you? Yep, it's us, Market Sniper, and we're in our premium area, the sniper.circle.com setup for you. This is Texas Roadhouse steak restaurant no change from your dollars. Who knows? Good bread, I'm told, by the man who posted this. And is in our community, and this is an interesting one. This is what we do. We look at the macro and the big time frames. We annotate. You'll see the trend view here. You'll see a pattern, and guys were taking early shorts at this point. So over here on the chart, they were getting in early shorts. Why? Because we knew there was an earnings announcement coming. Earnings, and in fact there's a lot of equities that are giving us the structure we want into earnings announcements. Now when you get in early, if you get in here for example and your risk stop is there, you reduce that risk and you expand that reward by that much all the way to your geometric target. This is what's called low risk, high reward breakout trading, where the moves should be fast and impulsive in your direction. Well done to the community for this one. So that's our trigger time frame when we drop into the lower time frame. And when was this posted? Let's get some information. When and where. It was a short entry, stop, etc., etc. Well done to Horim. Oh, we should have a date somewhere, yeah? 28th of April. 28th of April. 2019. And of course I did tweet about this, but I haven't done any YouTubing on it. This is what happened next. Yes indeed, look at that beauty. Into the earnings, and then bang, next thing you know, down she goes. And that's straight away into a very nice risk reward situation, because we've got guys that are short close to 61. You saw the target we were looking for right the way down. Where were we going? Target 48.8. so that's really good. Target 48.8, and that's down here, and you're well on the way in terms of your risk. You could have entered anywhere there or above, and my apologies, your risk is there. Let's start again. Thinner line, draw with a thinner line. That's your stop just above that, and the guys are getting short in and around the 61, looking for the 48 level. So that's great reward. That is green for good. I should change colors every now and then. Always the red man. Liverpool got beaten badly tonight. Let's go with green. There you go. All the reds is here, and your greens is there, and that's a big risk reward trade. And what did you get? You got gap. So if you hadn't taken the early entries, sorry bud, you're missing the trade, or you're getting filled way down there. It's quite a risk when you trade into earnings, something to bear into mind. One of the reasons why we like to get in before. I'll also remind you that we're short on the Tilray. If you want to have a little look at that fella, let's see, let's just do that, close that, enter there. You can see how that one's going along. Also coming into an earnings, I suspect it could be helpful for us. Excuse me, suddenly got a tickle. Here we go, and we're looking for the 37s down here as well, and we were short up top by the 79s on an early for guys in the community. So some great shorts at the moment on everyday stocks. The market is being held up by a sort of nifty 50 syndrome. And even the big ones, the fangs like Google, are stumbling as well. So the earnings just aren't out there, but the valuation in the sort of dollar milkshake theory is driving a lot of money to drive the US stock market up. And it's been pushed up on a worsening outlooks basis, and it's already at hyper stretched valuations. You want to chase in and buy that? I don't know, be my guest. It doesn't smell right. Could it go wrong for longer? Absolutely. But there's also a mid-tier and a below the big fangs and the top dogs that are your corporatocracy of the current economic environment that aren't doing so well, and some super hot sectors that are cooling down, like cannabis here. And also seeing weakness in oil service sectors. We actually have a well beyond 60 risk reward trade that we've taken on earlies. Lots of entry. I've got super weighted on that, and it's rolling very much in our favor. And wait for it, it hasn't even broken our traditional entry. We've taken them early. That one, if it makes its target, could be huge, well through 60 risk rewards. So good stuff going on, and a lot of it short on mid-tier, second-tier equities in the US. There is pain out there. There is pain out there. Just because the S&P is hitting new highs, be careful. The breadth is not as broad as you think. There's a breadth indicator called the advanced decline line. Go have a look at it. Go learn about it. How many equities are driving the market higher? Those mid-tier and smaller caps are battling out there. Okay, that's it. So we had a quick visit for you on Texas Roadhouse, showed you the community and the chats that are going on around there. Great trade, great setup from community members. We'll catch up with you again. Keep an eye on Texas Roadhouse. Still got further to go. I'm not saying to you should do anything. It's not a good time now to chase in, even though it's probably got more downside. Your risk is too far away. You want to be early. You want to have your risk tightly managed, and you want to trade expansive trades, although there may be overperformance because there was also, if you remember, a bit of a head and shoulders pattern in there, which actually took you down to 44.72. That's a final clue for you. Good night, good night, good night. Trade well, trade safe. If you want to find out more, go to themarketsniper.com, have a chat with one of our guys, or check in and just grab our mini series and get a feel for what we do. Till then, I speak to you later. Trade safe, trade small, trade sensibly. Yes, sensibly. Engage the rational mind. Do not let your amygdala part of your brain drive you into fight or flight trades. In the absence of method, emotions take over. Okay, here endeth the epistle. Bye for now.